It's trading week. We've got a collection of features, op-eds, and research on CoinDesk.com, as well as interviews right here on CoinDesk TV, all dedicated to the topic of trading crypto. Joining us now to discuss is Cory Klippsten, CEO of Swan Bitcoin. Cory, always a pleasure to have you on the show. So you're featured...
Trading week.
Yeah, we want to learn about trading Bitcoin.
All right.
We want to know how to earn. If you,
I'll be the counterexample, as I often am. That's fine.
Okay. All right. But Cory, you're featured in a new CoinDesk.com article about your views on dollar cost averaging. So maybe first you can explain what is the problem that traders often fall into when, they're trying to time the market or, when to get into Bitcoin.
Yeah. So first off, I just want to thank Mark because I read the piece when it came out yesterday. I thought he did a great job of laying out the case and capturing it really accurately. So good job, Mark. Got to get you on TV more often, by the way. Do some of these. But he says that Christine is better at it. So dollar cost averaging basically just means what I like to think about is like set it and forget it. So you just decide there's a certain amount of dollars that you're going to put into an asset every day or every week or every month, and you just stick with it. Traditionally, it's actually been a way to get into a position in like a bear market or get out of a position in a bull market. So it's like a limited amount of time. In the Bitcoin space, we usually just use the term to mean like an automatic recurring purchase or setting up a savings plan. And so we do that at Swan. Obviously, that was the first product we launched with, almost 3 years ago, which is just letting people set up that automatic debit from your bank account, automatically buy the Bitcoin, and then you can even have it automatically sent to self-custody or leave it with us at Swan. And that's kind of the genesis of how we got started. We care about it a lot. You asked a little bit about why should people think about doing that? It really comes down to human psychology and the fact that we animals with our lizard brains generally chase shiny objects. And so we get really scared of scary things. And so something like 95, 96% of people will actually buy high and sell low if they don't actually have a program in place. So that's kind of the main psychological benefit and the reason that it tends to work for people over time.
Yeah. So, I mean, the idea is that you're in a bear market. You can never really time the bottom. So you might as well just put in a little, here and there when you can, and then build a position over time. And we're also contending with folks who are, trading firms. You've got, Alameda Research. You've got an article that mentions jump trading as well. And it's an uneven playing field out there. And so maybe you could talk a bit about that. And you also say that you see Bitcoin as the only cryptocurrency suitable for dollar cost averaging. Why is that?
Yeah, and for that last point, in particular for sort of a long-term automatic recurring purchase plan that you don't turn off, it's really the only one that makes sense to accumulate. And that's just borne out by the numbers. We actually did the research over the summer. I think it's called Bitcoin and the one-hit wonder altcoins. You can see it on the Swan website. But we did the research, and only 3 out of 22,000 altcoins have ever had a new all-time high in Bitcoin terms 3 or more years after their first all-time high. And even those have bled out tremendously down, significantly over 50%, over 90%. Since those new all-time highs. So, you're basically just playing a trading game. It's trading week and Bitcoin is for saving and altcoins are for trading. So that's how you should think about the difference in a trading context. That's the difference between Bitcoin and altcoins. Bitcoin is your savings account for the long term. And, all the cryptos are just for trading.
All right. And you see Bitcoin as the third leg of a family wealth building program, not the only thing investors should ever buy. So the first leg is traditional retirement account. Maybe you can explain.
Yeah, absolutely. Because the IRAs and the 401ks are tax advantaged, you're getting so much free money essentially upfront, just granted to you by the system the way it is. Or with the 401k, if your company matches, you definitely want to max out at least the amount that they'll match you 1-for-1, or maybe, if they're matching 50% or something, you want to take advantage of that free money essentially. And then, I think, again, partially because of our psychology, you can use those rent versus buy calculators all you want, but the fact is, you're much more likely to make a house payment if not making it means you'll lose your house. So it's kind of a forced savings mechanism. Seems to work really well, especially for Americans, where we are kind of always over consuming. Even more than most other places around the world. So I'd say those two things are kind of the traditional ones. Max out your tax advantage retirement savings, buy a house because otherwise you short housing. And then I think Bitcoin is that thing you want to think about as the third leg of the stool. You want to be accumulating a little bit of Bitcoin every week or every month, set it and forget it, swan and chill, as we like to say, and just make sure you're building yourself a nice pile of sats.
And when you first got into crypto, you set up trading alerts on mobile portfolio tracking apps like Blockfolio and Delta. By contrast, some say dollar cost averaging offers a way to invest in Bitcoin or another crypto currency and still have a life. So we all want a life, Cory.
We do.
And dollar cost averaging could,
crypto traders
let you.
I'm sorry, Christine. Go.
Swan and chill, or chill and swan. I don't know what you said, but it sounded cool.
Swan and chill. Swan and chill.
Swan and chill.
Got it. Yeah, you don't want to be that guy that has the family's upstairs and you've got just the green screens glowing on your face at 1 a.m. because some altcoin is crashing or your buddy told you to buy this.
We don't want to be that
dog
person.
coin or something. You don't want to be that guy.